Hello and welcome to Value Research Podcast. You're listening to First Page, a column written by Dhirendra Kumar. The power of questions. Success in investing comes from interrogating your decisions, not seeking certainty. The investment world is obsessed with answers. What stock should I buy? Which fund will outperform? When will the market peak? This endless search for certainty drives much of the financial media's breathless coverage and fuels an entire industry of forecasters, tipsters, and gurus who promise to reveal the future. Yet, you'll notice something peculiar if you observe genuinely successful investors, those who build wealth consistently over decades rather than making fleeting gains. Their advantage rarely comes from having better answers than everyone else. Instead, it stems from asking better questions. Consider Warren Buffett and 𝗔𝗯𝘂𝘁𝗲, who for decades avoided technology investments despite their meteoric rise. They didn't avoid tech because they lacked intelligence or foresight, but because they rigorously questioned whether they truly understood these businesses. While they missed some winners, they also avoided spectacular failures like pets.com and 𝗩𝗹𝗂𝗲 that ensnared supposedly sophisticated investors. The questions we ask shape our decisions. When most investors approach an opportunity, they ask, how much could I gain? This focus on potential rewards creates a psychological blind spot to risks. Successful investors invert this approach. They ask, what could go wrong here, and what is the worst case scenario? This questioning discipline acts as a protective filter. Before considering potential returns, ask yourself, what specific purpose will this investment serve in my portfolio? If you can't articulate a clear, rational answer beyond vague notions of making money or not missing out, it's likely best to walk away. Another crucial question: under what conditions would I sell this investment? Defining your exit criteria before you enter forces you to confront weaknesses in your reasoning. You may be operating on faith rather than analysis if you can't identify specific events or evidence that would invalidate your investment thesis. Perhaps the most valuable question is also uncomfortable. Is there any emotion driving this decision? We humans excel at constructing elaborate rationalizations for decisions we've already made emotionally. The desire to follow trends, the fear of missing out, the comfort of doing what everyone else is doing, these emotional drivers often masquerade as reasoned analysis. In my years of advising investors, I have noticed how easily we confuse familiarity with understanding. A company might be a household name and its products are used daily in our homes, yet this doesn't mean we comprehend its business model, competitive advantages, or financial structure. Questioning our assumptions about what we think we know can be surprisingly revealing. The simplest questions are often the most powerful. What am I paying for? Cuts through complexity and forces clarity. Whether evaluating a mutual fund or a direct stock investment, this question helps separate value from costly embellishments. The beauty of question-based investing is its accessibility. You don't need special qualifications or insider information to ask, what evidence would prove me wrong? Such disciplined interrogation provides a framework that works across market conditions and investment types. Importantly, good questions serve as emotional circuit breakers. When markets become frenzied, whether through irrational exuberance or panic, methodically questioning your assumptions creates valuable space between stimulus and response. This pause is often all that's needed to avoid costly mistakes. Of course, questions alone don't guarantee success, but they dramatically improve your odds by filtering out bad decisions before they occur. Remember that in investing, avoiding mistakes often contributes more to long-term returns than making brilliant selections. Before your next investment decision, try shifting focus from hunting answers to crafting better questions. Ask not just what might go right, but what could go wrong. Question not just the investment itself, but your motivations for considering it. The quality of your financial future may depend less on having all the answers and more on mastering the art of interrogation.